Welcome to this Wednesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. India's infrastructure output growth slowing to its lowest level in 8 months, dragged by weakness in the energy sector. Indian markets could see a rebound today after foreign outflows saw their biggest single-day drop in months. And Finance Minister Nirmala Sitharaman says India's regulatory maze could be a hurdle to concluding trade deals. Let's give you the picture at the APAC markets level, and they are mainly looking sharp, with the exception of the Nikkei slipping just fractionally, and a similar story for the Straits Times, and over in Malaysia for the benchmark there, the KLCI, down by 0.2%. As far as the Indian markets are concerned, they join the trading day in 45 minutes' time. Let's take a look at Gift Nifty futures, what they are implying for the market open. We're looking at an open below 25,000, actually, 24,797. So that does still constitute a lift of about 100 points or so, given where we left off for the benchmark yesterday at around 24,700. Dollar rupee exchange rate at 85.5820. We also got infrastructure data from India yesterday, output in April dropping to an 8-month low and growing at a rate of 0.5% against 4.6% in March. The index tracks activity among 8 core sectors, including crude oil and refined products. That saw the biggest slowdown last month. This ahead of quarterly GDP growth data next week. Right. I'm very happy to say that my good colleague and friend JP Ong is back with us in the flesh from Computex in Taipei, hot-footed it over to Singapore. But the data centre story continues. Energy demand coming from data centres, that's been a hot topic globally, JP. Tell us more, and how is the industry? What did you learn from Computex in terms of how the industry and the ecosystem is trying to manage that challenge?
You know, Sri, there's, first of all, back in one piece, thank heavens. But there are a lot of questions, and what we've learned from Computex is we've learned covering this space is that there are a lot of moving parts, and it's even in the area of power management. How are you going to power the massive demand required to run these data centers? But there's also the question of how you're going to cool them efficiently, because cooling systems also require a lot of power. Currently, a lot of these go through air cooling systems, which means you've got a lot of fans, a lot of heat sinks to absorb these. But these take up a lot of space, and also a lot of resources like water and the like. So one of the things that's being proposed right now is what's called immersion cooling. You're taking these low conductive liquids, and you're immersing the entire system actually in these liquids that will nick a lot of the heat that's generated into this system. That can also save a lot of time and also require less resources and less water. But there are some sticking points as to why the industry is not moving towards this. We spoke to BP Castrol CEO Michelle Zhou actually about this, and what the sticking points are that's making it difficult for data centers to actually take the jump towards immersion cooling. Here's what she told us.
Every time you see a technology change, of course, it's replacing actually the old technology. So you need actually certain time to migrate into a new technology. So what we are doing actually when you talk about cooling solution, it includes also liquid cooling, not just immersion cooling. So one is very technical, but it's water-based cooling and also immersion cooling. Slightly different technology, but the objective is all about reducing the heat, right? Better thermal management. So the industry players are already adopting the direct-to-chip cooling, but from there you need to go to immersion cooling. Immersion cooling, basically, you put your server immersed into a non-conductive fluid. And this is the most efficient in terms of a design, in terms of efficiency gain. So we are working with really a lot of value chain partners, and that includes actually design company, that includes the hardware I talked about, software company, and also the operator. And they all understand the need to drive this. And we are taking step by step, because we need to actually demonstrate that it's reliable and we have enough data point to support that transition. And we are very confident this transition will happen.
This is also important, Sri, because what's really constrained data center rollouts in countries, not just here in Southeast Asia, but even in India, is water resources, because water is still seen as one of the main components to try and cool data centers. If we start to move towards immersion cooling, you'll need less water and perhaps the necessity for water resource management. And copious amounts of water to power data centers might be less of an issue, and thus also means you can roll things out more quickly in countries like India, for instance.
So sustainability solutions and renewable energy solutions are the preferred solution to power the data center and the AI revolution. But SMRs, nuclear generation, the next generation of nuclear power plants, they are on the table as well, but it is a controversial topic.
It is. I think for that component of power, at least, it's a question of how safe it is. And nuclear power, while they've made huge strides in making sure that waste and also security are actually addressed and they can operate in safe and environmentally friendly manners. Small nuclear reactors, again, there's still a few questions that probably have to be answered, and also to assuage the public, because again, public sentiment, it's a little bit mixed towards nuclear power at the moment, especially in countries like India, for instance.
Absolutely, JP. Thank you very much indeed for that. Power shortages seem to be a cause of concern for Elon Musk. Musk flagging power generation could be an issue for the advancement of the United States AI capabilities. Here's part of what he told CNBC's David Farber in a wide-ranging interview.
My guess is people are going to start hitting challenges with power generation maybe by middle of next year. Next year.
Even with deregulation and an effort being made to perhaps move permits along more quickly.
You have to say, like, how many power plants are getting built and how fast can you build a power plant?
Right. China seems to be building them pretty quickly.
China has so many power plants that have been built and are being built. I don't think people quite realize this. I posted on my X account just the graph of U.S. power generation versus China power generation. And China power generation is looks like a rocket going to orbit. And U.S. power generation is flat.
Right.
So I think by the end of this year, China will have about 2.5 times the power output of the United States, and it's headed towards maybe 3 or 4 times the power output of the United States.
In the meantime, amid power concerns, companies are still going full steam ahead in rolling out AI products. Emily Tan joins us to tell us about one such company. Good morning, Emily.
Hi there, Sri. And ASUS, this company makes AI PCs, has a big suite of them, as well as making AI servers for the likes of NVIDIA and the GB300. I got a chance to speak to the company's co-CEO, S.Y. Hsu. He was down at Computex, and about the company building out on its ubiquitous AI strategy. They're most excited about the GB300, which they received significant orders of, which they announced at the NVIDIA's GTC conference just a couple weeks back. They are on track for H2 delivery, so everything is on schedule for that. In terms of the AI PCs, with all of the diverse range of products that they have offered, the uptake, the take-up in the AI PCs has not been as fast as some has expected. So I started by asking him about those expectations for the PC maker.
Actually, I think we are so strong in the AI PC category because we are the company can provide most comprehensive product line for the whole AI PC because our product cover from the Qualcomm, Intel, and AMD. And actually, currently we have the over 30% share for the AI PC. I think it is quite aligned with our expectation. But of course, I think this year is the first year for the AI PC, so still have a lot of room to grow. For C, in the 24, we can have around 20 to 30% of the in-house share is the AI PC.
So 20 to 30%, how long do you think before AI PCs can dominate the market?
I think for the whole AI PC ecosystem, it's not only just the hardware. Of course, right now we have a lot of AI PC hardware already, but I think the software is also very important. So for the AI PC to become the mainstream, I think we need to spend some more time. But I think for the next 2-3 years, the AI PC will become the mainstream over 50 to 60%.
ASUS delivered a strong Q1 report card with significant growth in revenue and profits. Now, some companies have refrained from giving forward guidance, citing tariff uncertainties. At ASUS, can the momentum be sustained? Can you share the outlook with us?
Yes, actually, we have very strong Q1. Actually, the revenue growth YOY is 18%. Our revenue is 135 billion NT dollar. And our profit is 12.8 billion NT dollar. And the EPS is over 16. So those numbers is hit our quarterly record high. So actually, this strong performance is all coming from our shipment for the gaming and our PC product, and also our AI server related product.
ASUS, a major exporter, and of course, so when you talk about exporting and the company's products being made in China, you think of tariffs and Trump's tariffs. So, of course, the conversation also discussed that. How are they going to be realigning their supply chain? How are they going to be impacting and passing on the costs, if you will? Of course, we did discuss that. And SY said that even though they have moved some of their manufacturing, they're still keeping the bulk of it in China because they still have the best supply chain and the cost structure. We heard the threat from President Trump telling Walmart to eat the tariffs. When I asked ASUS whether or not they're going to be eating the tariffs, SY said that they're going to be still needing to pass on some of the costs to the consumer, but because of the competitive environment of the market, they're going to be trying to do their best to stay competitive in terms of pricing in the U.S. Sri, it's back to you.
Great work, Emily. And of course, we're going to have to see what the shape of earnings tells us in terms of that narrative of eating the tariffs and what it does to margins and profitability ultimately. Thank you, Emily. Let's return to India, and we are keeping tabs on the updates coming out of the trade negotiations between the United States and India. Commerce Minister Piyush Goyal posted a picture on X with the US Commerce Secretary Howard Lutnick. Goyal touted the good discussions between the two countries to expedite first tranche of a bilateral agreement. This comes amid reports that New Delhi is seeking a trade deal in 3 tranches with Washington, the first of which is expected to be finalized by July. In the meantime, Indian Finance Minister Nirmala Sitharaman was speaking at a Competition Commission of India event. Finance Minister flagged how regulatory and litigation delays could hamper India's global trade negotiations.
Delays in regulatory clearance can lead to uncertainty, disrupt commercial timelines, and potentially erode the intended value of transactions. And globally, it has an impact even as we negotiate free trade agreements with different countries, because the ability, the nimbleness, and the readiness of our regulators is very keenly watched by investors. There is no need for me to underline the importance of that, but that has a very serious connotation when you're looking at fairly within reasonable time agreeing on some free trade agreements. So whether it is litigation, whether it is time consumed in litigation, or whether when regulators are less transparent, negotiations can get complicated.
Let's take a step back and just try and assess where we are in terms of this road towards the trade deals, especially India-US BTA. And bring in Ajay Srivastava now, founder at Global Trade Research Initiative. Ajay, thank you very much indeed for joining me on Inside India. Let's just pick up on the Finance Minister's remarks there. And could India's notorious license Raj potentially disrupt or derail a trade deal from getting done?
No, trade deal has nothing to do with the license Raj, and license Raj is an old term. It's long dismantled. And I think we have lesser number of non-tariff barriers than many countries. And so I don't agree that India license Raj is still active. It was largely dismantled in 1991.
How then would you characterise investor perceptions, Ajay, towards the ease of doing business in India, investment restrictions that still exist, and perhaps perceptions from international investors of over-regulation? And to what degree, in terms of market access, do you think this trade deal will address those issues?
Most of the perceptions, they don't exist in the minds of the investors. And investors, many of them, they are shifting. As you see, the Apple shifting 15% of iPhone production from China to India. If India is not competitive, they will not have been shifting. So from Apple, then we are having solar panel manufacturers shifting from many countries to India, and many others are shifting. And because of now US-China war, the movement expedited, it accelerated to some extent. But now as tariffs between China and other countries, they are almost getting equal in US eyes, that movement China plus one will be slowed down. But I want to say that this perception that India is a licensed Raj, it's a 30, 40 years old perception. Most of it is largely, it's dismantled. Of course, we have certain problems. We are dealing with those things. And one, if you want to look at the metrics, then ease of doing business report of World Bank, which was discontinued 4 or 5 years back. You know, India jumped more than 50 ranks on ease of doing business, especially on trade side. So I don't agree with this. And our investment regime is fairly open, and 100% investment opportunities are there in most sectors except some strategic sectors.
Ajay, well, thank you for that perspective. So broadly, if both sides appear to be closing in on a multi-phase agreement, then could there be a US-India deal by as early as July, or is a deal by Diwali still the most realistic outcome?
In fact, nobody knows the details. Many agencies, they publish 3-tier deal, 4-tier deal, but officially there is no information. What I expect is that US-UK type deal, which means you handle with top-line products and some buying by India from US, for example, oil. Something like that can be announced maybe this week, this month. Nobody knows about that, but I feel that US doesn't have the patience for a well-negotiated long-term deal. That's how they went with a short deal, a top-line deal with the UK, and I expect the same for India.
Ajay, I've been hearing that from India's standpoint, concessions or changes to the tariff structure as it applies to agriculture could be a very, very contentious issue. And this was an issue that we addressed yesterday on Inside India with Pradeep Mehta from Cuts International. I want to play you his response, and then I will get back to you in the conversation.
It is a very, very sensitive issue. We are an agriculture-dominant country, but nearly 60% of our population are dependent upon agriculture or rural areas. Secondly, our farms are small. This is like most of the land holdings are small due to land reforms, and therefore productivity is low, and therefore the cost is also high. I mean, as a comparison to any other. Now, in US, agriculture is subsidized under the WTO agreement on agriculture and allowed to be. Now, unless US agrees to take out its subsidies from its agriculture and then compete with Indian farmers, there might be a better scope than what exists today. Secondly, farming is, as I said, is still not yet corporate in India. It is widely distributed. It's probably the largest private sector enterprise in this country. And there is an emotional connect of the farmer with his land, whether or not he produces the crops at a profit or not, but he's continue to till it, cultivate it, and produce crops. So therefore, it is a sensitive issue, and I don't think India will relent on it.
Ajay, would you agree with that? And do you think zero agricultural tariffs from India's standpoint is a non-starter, just given how sensitive this issue is? And how much of a stumbling block, ultimately, do you think agriculture is going to be in terms of getting a US-India trade deal across the line?
So Mr. Trump talks about the trade deficit with India, and he says high tariffs, they prevent US exports from reaching India. So I say India will be willing to cut tariffs to zero level on 90% of US exports to India. These will include all the industrial products except probably automobiles, and no cuts on agriculture. So if trade deficit is the problem, I am solving 90% of his problem by making tariff zero on day one. Of course, on reciprocal basis, provided he does the same with India. It has to be a reciprocal deal, and trade deficit problem will be solved. I'm committing to make tariff zero on 90% of US exports. That will, of course, include everything except automobiles and most of the agriculture products. So I agree with Pradeep. Agriculture is a way of life. It's not a trade issue for us. 700 million people depend on that. Their life will be in jeopardy. And if you study what happened to Africa when they opened agriculture to subsidized goods, subsidized agriculture products from Europe or America, you see they face recurrent famines. India doesn't want to go that way.
Ajay, let's pivot to India's ambition to move up the value chain and move up towards advanced manufacturing. Judging by President Trump's most recent remarks, he's not keen on Apple relocating more manufacturing to India. How does that complicate matters, in your opinion?
So, it was very amusing for me because 85% of the iPhones are assembled in China, just 15% in India, and that's a recent phenomenon. So Mr. Trump has no problem with China assembling these. That's all right. It's his views. Just 15% in India, he has problems. So I say it's fine. Mr. Tim Cook should listen to Mr. Trump, and he should shift assembly from India and China also to US. That will create 3-4 lakh low-end sub-assembly jobs in US if US is targeting those things. And I want to say that for $1,000 piece retail price of an iPhone, India or China at the stage of final assembly gets less than $30. For $30, India getting or China getting, our trade deficit with the US shows as $7 billion. So we'll be happier off if Tim Cook listens to Mr. Trump, and creates jobs in low-end jobs in US, shifting this from not only in India, but also from China, because more jobs will be created because 85% production of iPhone comes from China.
Ajay, where does Prime Minister Modi's Make in India policy fit into the broader trade deal narrative? And should a commitment from US businesses to invest in production-linked incentive schemes in India be a central component? Should that be enshrined in any BTA?
So these are domestic policy measures and not discussed in any FTA or BTAs. And all countries like US also has Inflation Reduction Act where it grants more than $300 billion of subsidy. India's PLI is just $25 billion worth of a scheme, very, very small compared to what US or EU schemes are. And these are not, they are never part of any FTA discussions.
Ajay, we have to leave it there. It's a fascinating conversation. Do come back and we can revisit a lot of these topics again as we get closer, perhaps, to the conclusion of the US-India BTA. Ajay Srivastava there, Global Trade Research Initiative. Thank you. Coming up, we will keep track of all the big news and updates in the world, from a tax bill in the US to more sanctions on Russia. Welcome back. You're watching Inside India. Some of the stories we're keeping tabs on outside of India. Britain and the European Union have slapped new sanctions on Russia, going it alone without the US. They target its shadow fleet of oil tankers and firms helping it evade penalties. The move comes a day after President Trump's call with Putin failed to secure a ceasefire. European leaders say that the Russian president is stalling and wants Washington to step up. Israeli airstrikes have killed at least 50 people in Gaza as global criticism of Israel's military campaign grows. Britain, France and Canada warned of concrete actions if Israel does not halt its offensive. Gaza's health system is overwhelmed with dangers of famine looming. US President Donald Trump is struggling to win over Republican holdouts on his sweeping tax cut bill, which extends tax breaks and tightens Medicaid eligibility. He warned House members not to demand more changes, but a few dissenters could still block it. Coming up on the programme, the Indian defence sector has been witnessing renewed optimism after the conflict with Pakistan, but can the rally sustain? We'll discuss that with Jefferies India after the short break. Welcome back. We are counting down to the market open in India. This is how we are shaping up. Let's take a look at the futures picture as a guide. GIFT Nifty futures are giving us an opening number implied of 24,789. So that is about 100 points to the good, judging where we left off for the benchmark yesterday. Dollar rupee exchange rate 85.6330. Both the Nifty and the Sensex did finish lower on Tuesday's session, with foreign outflows at their highest since late February. Indian equity valuations seem to be a concern, and as we also saw an uptick in bond yields in the United States and Japan. Pakistan's GDP data is in focus. The economy grew at a rate of 2.4% in the January to March period. Pakistan's National Account Committee is now projecting better growth for the current fiscal year. This comes as the country has received a bailout loan from the IMF, and the central bank sharply cut its policy rate by 100 basis points last month. Pakistan's Foreign Minister Ishaq Dar is currently in Beijing. He met his Chinese counterpart there, and the Chinese Foreign Minister hailed Pakistan and India's approach in handling differences through dialogue. In the meantime, some reports suggest China could fast-track delivery of its J-35A fighter jets to Pakistan. This leads us to the defence story in India. India is also trying to ramp up its defence capabilities. Earlier this month, India signed a new defence cooperation agreement with Japan. Reports say Tokyo has offered to help New Delhi develop fighter jets and tanks. Take a look at how some of these listed names have done since the start of the India-Pakistan conflict. Names like Paras Defence, that focuses on design and manufacturing, are up in the double digits since the start of the conflict, despite profit booking. Drone manufacturing, IdeaForge, is up over 48%, and drones were the most used technology by both India and Pakistan during the conflict. Defence shipbuilding names, too, have seen double-digit gains in this period. Let's bring in Lavina Quadros now, Managing Director, Equities Research at Jefferies India. Lavina, thank you for joining me on Inside India. And let's start with the tensions and Operation Sindoor, and how, in your opinion, has that affected and impacted the listed defence space?
Hi, thank you for having me. Just to start off, right, obviously tensions is not a good starting point, but just to begin over there, clearly, post-Operation Sindoor, right, India's defense capabilities have come to the fore, even at the global level. One of the things that has happened in India, and I think you need to go back a little bit in time to understand this better, India was one of the largest importers of defense equipment. The whole idea of self-indigenization and domestic manufacturing in India of defense equipment started only from 2014. So India has clearly come a long way in the last 10 years. One of the most impressive aspects was that a lot of the domestically manufactured equipment was used in Operation Sindoor. And for me, that has changed perception also for, let's say, a lot of the Indian defense companies globally in terms of what India can actually manufacture, right? So just a simple thing, for example, Akash Tir. That was one of a domestic manufactured air defense control system. So just to put it in layman's terms, it actually helped to intercept, for India, to intercept drones that came in from Pakistan or Air Force that came in from Pakistan, and to actually help intercept it. So it ended up reflecting on all defense forces screens at the same time, so a coordinated answer could be given to that. So in that sense, for me, these tensions have clearly put Indian defense equipment out there and made people understand that this is something that indigenization has actually helped in the last decade. So India's reduced, the amount of imports we used to do on defense. So for example, back to 2014, India was importing 70% of defense requirements. That's when the government came in and said, we want to import, we want to switch this ratio. We want to go into importing just about 30%. Yes. So it's been a good journey, and we're still some way away from that 30%, but at least clearly imports have gone down a fair bit and probably close to that 50% or lower number.
Lavinia, thank you for that. Now, at a sector level, there is a perception that this is an area of the market that looks overextended. I put that question to Sri Jegarajah yesterday at Motilal. This is what he had to say.
I think this Operation Sindoor makes one thing very clear, that the investment in our defense infrastructure is not going to get over any time over the next few years, right? We have to keep investing, keep building more capabilities, and that holds true for every country in the world now, right? Defense is something which has only come of age in the last 2-3 years from the private sector point of view. I think the re-rating into the stocks have been massive. Now you need to see the order book getting translated into the revenue numbers and the profits. So stocks have run up a lot. I think profits need to come. But this is a sector which is going to keep investors interested for quite some time.
Lavina, what do you think of that? Is valuation a concern in some areas of the market in the listed defence stocks? To what extent is it looking overextended? And what could be the catalyst for a correction?
So, I mean, thoughts that I heard were interesting. I'll tell you how I'm looking at valuations, right? For me, valuations is always a function of growth and is a function of visibility. What has clearly changed in the last 6 months for the defense sector, right, is if I had a visible outlook for 3 years in defense, that outlook has now moved to a 5-7 year visibility, right? Some companies within the sector will benefit far more than other companies, depending on the area you're working in. But defense spend is here to stay, something that is clearly visible. So yes, you've seen stocks re-rate on the back of that, but one should also not, I mean, if you look at Indian companies in general, right, a lot of the public sector owned companies particularly, if you have a look at them, they are very strong balance sheets. You have a 20% plus ROE. And today, probably for a lot of them, you have very good visibility on double-digit earnings growth, probably 15 to 20%, being there for 5 to 7 years. So just to answer your question, there's no doubt about the fact that stocks are re-rated. But again, if you're in the right stock and if they execute, so clearly execution has to take place. There's no two ways about it. As long as they execute, you still have scope for much more upside even from here. But again, like I said, it'll have to be more stock specific. But for me, the theme is here to stay, and it's logically here to stay. I don't think that I'm not in that camp, at least for the moment, that things are irrational. I'm not there. So again, I'm not saying stocks may not correct near term, but I'm just talking about a 1 year, 2 year medium term outlook. For me, there's still some way to go.
Make in India and defence plays a big part in that, and indigenisation is a very compelling long-term theme, Lavina. But Rajat touched on this. The defence sector is notorious, isn't it, for the lumpiness of the order flow, execution. That means quarterly earnings volatility. Where in the listed defence sector do you find this most problematic?
Okay, that's again a very fair question. So I'll put it to you like this, right? There are some companies which are more, so discussing business models, there are some companies which are more product based, right? So for example, if you look at Bharat Electronics business model, it's more a product based company. So what ends up happening is as a function of that, you find it's less lumpier as far as, let's say, execution is concerned and revenue bookings are concerned. If you look at a company which manufactures and sells aircrafts, again, if you look at the business model of Hindustan Aeronautics, you'll find their revenues tend to be a little more lumpier, right? Because you need to actually deliver the aircrafts, and then some years you can grow slower and some years you'll see a massive jump, depending on which year you've had the maximum aircraft deliveries. So in that sense, again, it's a company-specific aspect. But coming back to it, I think somewhere valuations do factor in the fact that, some companies, you'll need to look at more a 2 to 4 year or a 3 to 5 year CAGR versus just looking at, nearer term earnings, given the business model. Yes. So order books are fairly good for the sector, and that's what's giving you visibility, right? Like for some of these companies, order books are more than 3 times of current year's sales. So that's where I'm coming from. But execution, where I'm touching upon as well, is the reason you at least have to show execution is so that people get convinced you can actually, or investors get convinced you will end up executing that order book. So for that, I think quarterly earnings is important, and of course annual earnings also.
Lavina, let's bring in Prime Minister Modi, and he seems to be heading for a triple crown moment in terms of trade deals. UK-India is more or less in the bag. EU and the US are waiting in the wings, potentially. All major exporters of defence equipment. But are there opportunities for listed Indian defence names to pursue JVs, pursue partnerships under the banner of these deals and expand into those critical markets?
So, again, here, it's a very fair question. So the way I'm looking at it is, if you again go back in time, right, India was the largest net importer of defense equipment and it's only from 2014 that domestic manufacturing capability has really picked up and there's been a thrust in the country for it, right? So the way I'm looking at it is, as far as certain technology goes, India is clearly out there and in a very good position to actually export that equipment. These agreements at the government to government level is very key for Indian companies to be able to export outside, because as you must be knowing as well, and investors know as well, that defense is a very controlled subject across countries. So for me, again, India is out there and our cost of manufacturing could clearly be a good selling point, right? As far as supplying and exporting of defense equipment is concerned. On latest technology, I think India does have some way to go. But for example, like the S-400, which were Russian missile systems that were used in Indo-Pak, right, by India, which we imported from Russia. For example, that, India could focus on indigenizing over the next 3 to 5 years. So just to answer your question, there is scope, but it isn't certain technologies which you will see emerging over the next 3 to 5 years. You might have also, the good part is the government is being very proactive. India is actually out there giving certain countries interest-free loans, which is also in the news. They're giving interest-free loans for countries to actually buy defense equipment, right, from India through Exim. They're routing these loans. So the good part is the government is focused in that area. India's exports are rising on the defense equipment front. So this should continue to give results over the next 3 to 5 years.
Lavina, if selectivity is key in this environment and identifying the names that perhaps have not participated in this recent rally and may also surprise on the upside on earnings, then what do you think, what narratives or what names have been overlooked and what should be on an investor's shopping list in the event of a pullback?
So again, I think I'm a little restricted to comment on stocks specifically, but just coming into business models, right? Missile systems, air, right? Fighter jet aircrafts. These are two clear areas which have very good growth prospects and visibility for the next 3 to 5 years. Drones is also a very interesting area. The only catch with drones is there are multiple companies manufacturing drones, right? So which of them do well, which of them succeed? One has to be a little more conscious of how many of them actually own the technology. Because one thing is very important in defense, right? If I'm just doing tie-ups with a global player and I don't really have the IP, then the sustainability of my business model becomes a bit of a question mark in the longer run. So therefore, one has to be very conscious that the IP rests with the relevant defense company. But for me, like I said, missile systems, air, those are areas, aircrafts, those are areas that clearly should move forward. Defense electronics as well, which is a part of the missile systems and supplies to Army, Navy, Air Force, clearly very, very important areas.
And without going into the specifics of the names, Lavina, what about Indian naval shipbuilders? That subsector of defence, reportedly, again, strong order book, multi-year revenue visibility, though here's the rub, execution remains key.
Yeah, so on the shipbuilder side, the good part for those companies is the visibility that they have. But on the execution side, clearly that is what will, logically, that should take the stocks ahead from here on. So you've seen the re-rating, I guess, for the space as a whole on the order book, outlook change, visibility. And, coming back to it, your quarterly run rate on revenues, your annual run rate on revenues is key for upside from here on as well.
Now, in the West and amongst European and US investors, there has been considerable pushback against defence stocks. As a matter of ESG, on principle, it's been a no-go area. Lavina, I'm just curious, is there any such movement that is being developed in India? And is defence investing and ESG, are they mutually incompatible areas in your opinion?
So I'll put it to you like this, domestically, right? I've seen any movement of this nature to put defense as, anti-ESG, so to speak. But I will add this as well, that even globally, I'm seeing some softness in stands towards defense, where a lot of global investors whom I used to have discussions with, they're now more open to investing in defense, because one thing that has has come across, or one thing that I think is getting understood across the world as well, is that self-reliance on defense is key, right? And if you do want to do R&D, you do want to spend, you do need cash flows in order to do those spendings. So I think somewhere the ESG stance, even globally, is softening on this area.
And I'm sure you're well aware of how BrahMos has been expanding their exports to the Philippines and Vietnam. It is a missile system that was developed between India and Russia. But are there any implications, Lavina, for the listed defence space from these developments?
So again, BrahMos has a lot of defense electronics, right, which is used. So again, going back to business models of companies, there are companies like Bharat Electronics as a business, Data Patterns as a business, and let's say certain other companies. They are the ones who supply defense electronics to missile systems. There's Astra. There are multiple of them who manufacture defense electronics. So I think there in defense electronics, there could be an opportunity for the listed space also.
Yes, there are a lot of spin-offs here, given the components. And how are you looking at AI as a factor, as a multiple of the entire defence sector ecosystem? And if that is an area to watch, if that is an area of future development, then again, I know you're relatively restricted from naming names, but which business model amongst the listed space in defence is best positioned to really capture that part of the market?
Oh, this is an interesting question. So here, even I'm working to see which names can benefit from this, but I should start off and tell you that AI in defense is still fairly nascent. It's happening in India, but I think we do have some way to go before, one can list out beneficiaries of the same. So it'll be interesting to see how AI actually comes into defense and, how it is eventually used. So that's something one has to see going forward, because as of now, it's just developing. I don't think it is at very advanced stages yet.
Lavina, we have to end the conversation there. It's been a fascinating one. Thank you very much indeed for joining me on Inside India with your insights on the listed defence space in India. Lavina Quadros there from Jefferies, India. Thank you, ma'am. Now, the Indian markets have joined the trading day. We will look at some movers in Mumbai after this short break. Back in 2 minutes. Right, the Indian markets are just joining the trading day even. There are some jitters about foreign investor outflows, so that may very well keep a lid on today's gains, which we are seeing just fractional at this point in time. We're just around 5 minutes into the market open. 24,730 is what we have to deal with. Let's give you the exchange rate, dollar rupee at 85.5970. Flipping over to bond yields. This is where we are standing, and the benchmark 10-year Indian government bond yielding 6.231, and that's up just marginally by about 0.2%. Let's take a look at some of the movers in the Indian markets today. Dixon Technologies posting solid Q4 results, lifted by strong revenue growth and a one-time gain, benefiting from robust demand across its electronics manufacturing business, leading it to outperform street expectations. Operating performance also improved, with better efficiencies and higher volume supporting margins. In the meantime, signs of further volatility in the markets. The owner of India's Leela Hotels, Schloss, cutting the size of its IPO by 30%. Schloss now setting a price band of 413 to 435 rupees a share for the offering, and expecting a valuation of about $1.7 billion. That is at the upper end of the price band. Back to earnings, we are watching shares of Interglobe Aviation. The stock is flat around 5,439 rupees. This is the parent of air carrier Indigo, which reports quarterly earnings today. Analysts are expecting revenue surge in the range of 19 to 27%. Indigo is India's largest air carrier by market share. Now then, let's shift our focus to the Middle East, where Dan Murphy is joining us from Abu Dhabi. Dan, what have you got coming up on the programme?
Sri, good morning to you. Well, we have a really busy Access Middle East coming up in just under 10 minutes' time. Joining me exclusively on the show today is the Etihad CEO, Antonaldo Neves. We're going to take a deep dive into the airline's Q1 numbers due out in just a short while. So we'll walk you through how the business is performing. But specifically, we're also going to ask about this major new order that came hot off the heels of President Trump's visit to the region. 28 new Boeing aircraft on the way. I'm going to be speaking to Antonaldo about whether or not he is going to be able to get those planes on time and what routes those new aircraft are going to be put on as Etihad continues to chase a growth story in this part of the world. So, Sri, so much to focus in on as we see that big exclusive coming up for you in the next 10 minutes or so.
Outstanding, Dan. Looking forward to that. And I think we got you for a little bit longer. So before you go and you prepare for the show, what were your thoughts coming back from Lulu and ADNOC's move into the digital era and what that does to really sweat the asset and productivity?
Well, this has been a really important focus for the UAE. As we were discussing on the program on Monday, the Lulu platform is one of the largest pieces of energy infrastructure in the region. Of course, really critical to regional and global supply. It pumps about 135,000 barrels of oil per day. But of course, this is much bigger than just an oil story because it also speaks directly to the UAE's push to onshore domestic manufacturing. And this is something that we're, of course, talking about. There has been a push in this region to onshore domestic manufacturing to keep more in-country value, all part of a major initiative here in the UAE called Make It in the Emirates. And this is, of course, not just building up the resilience of this economy and attempting to create local jobs. It's also a move to shield against what has been quite significant disruptions to global supply chains off the back of the US's trade and tariff war. So we're seeing countries in the region respond in their own way, but in the UAE specifically, attempting to capture more of that value by essentially depending less on the rest of the world and focusing in on getting things done at home. So this was a great experience. My team and I had such a fun time on the platform. And really, in terms of making TV, on the high seas, Sri, this was a really, really complex outside broadcast for our show. And the team did an exceptional job of pulling it all together. And the results ultimately speak for themselves. Yeah.
Doesn't get any better than a hard hat and overalls and being on an oil rig. That's really taking show and tell to the next level, Dan. And, you know, the Make in Emirates really parallels what we have been seeing in India with Prime Minister Modi's signature economic policy. And we were talking about this with our prior guest, and as it applies to the defence sector, defence spending is going up, and rearmament, its narrative in Europe. It's a narrative over here as well in Asia, and not least of all in India. We've also seen that GCC India corridor really taking off with trade deals with Oman and more partnerships with Saudi Arabia. So that's all to the good. Dan, thank you very much indeed for that. Let's take a look at the Asian markets before we go. And we are seeing some leadership and positivity on the Kospi and the TAIEX, although some weak spots on the Nikkei and over in Southeast Asia in Singapore and Malaysia, but nothing disastrous. That's it for today's programme. Tomorrow we will track India's chip ambitions with the president of the industry body IESA, and also take a look at India's pharma sector with the managing director of Mankind Pharma. Don't miss that. Right, that's it for today's edition of Inside India. Do keep watching CNBC. Dan Murphy, you just saw him earlier, and Access Middle East is coming up next. Have a good day.